This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. Let's take a look at the auction market this week. It's continuing to cool off as we get deeper into winter. There are just 1,154 auctions scheduled across the country. New South Wales will host 500 auctions with 417 in Sydney. Victoria will hold 323 auctions with just 24 in regional Victoria. Queensland has 197 auctions scheduled with 103 of them in Brisbane. South Australia has 78 auctions scheduled. There are just 19 auctions scheduled across Western Australia, Tasmania and the Northern Territory, and the ACT has 37 auctions scheduled. Taking a look at the most viewed properties going to auction this week, and in New South Wales, it's number 112 Ethel Street, Balgowlah. This 3-bedroom duplex on Sydney's Northern Beaches has a price guide of $1.2 million. The top property in Victoria is in Melbourne's far eastern suburbs, located at 41 Alderford Drive, Wantirna. This 5-bedroom European-style villa has a price guide of $1.8 to $1.98 million. Topping the list in Queensland is number 39 Ellerslie Crescent, Taringa, in Brisbane's western suburbs. This large 5-bedder sits on about 470 square metres. The top property in South Australia is 41 Miller Street, Unley. That's on the outskirts of the Adelaide CBD. This 4-bedroom Victorian-style mansion was built around 1890. And rounding out the list, the top property in Canberra is located at 2 Geralong Gardens, Reed. This large 4-bedder sits on about 1,100 square metres. And the most viewed property on the REA Group website this week is a property purpose-built for Australian artist Shirley Hannon, who lived there and crafted her iconic art and copper artisan furniture within the large studio. It's very close to Ricketts Point in Melbourne's southern suburbs. Dubbed the Hannon House 2, this modernist home was designed by architect Joe Palliser and Shirley Hannon herself. The 4-bedroom home's perfect for someone who loves the colour brown. It has brown Daniel Robertson bricks throughout, brown custom-made tiles, brown wood panelling furniture. You get the idea. Each room spills outdoors surrounding the central entertaining garden and natural spring swimming pool. There's also the separate self-contained studio where Hannon worked. Price guide for this one is $4.9 to $5.3 million, and expressions of interest close on June the 27th. For more on the property market, I caught up with Paul Ryan from REA Group a little earlier.
It's pretty normal to have fewer sales throughout the dead of winter when it is cold and people don't want to head out to auctions. But it is a long weekend in New South Wales this weekend. But we've actually seen quite a lot of market activity. In May, we saw kind of a similar amount of property sales as we saw in 2022, whereas earlier in the year, we were kind of tracking about 20% lower than last year. So the market has really recovered quite strongly throughout 2023.
Yeah, and how have clearance rates been holding up, really?
Really, really strongly. They've kind of built throughout the year and now up above 70%. Now, they're levels we haven't seen since late 2021 and early 2022 when home prices were booming. So, yeah, the auction market and market activity in general is performing really, really strongly.
Property prices up for 5 months in a row. What's the sort of source of optimism here? Because when you look at the state of our economy, we just had the GDP numbers this week. It looks pretty bleak, but prices are on the way up. How does that work?
Yeah, it's an interesting phenomenon. We wouldn't have expected prices to increase into this, interest rates going up 400 basis points now. But it seems to suggest that household finances are in a much more robust place than we thought they were. There's a lot of people out there with a lot of equity they've built up over the pandemic. And really, demand is strong for housing.
What about the length of time stock's taking to sell? How's that going?
We're not seeing homes sell as quickly as we saw kind of in 2021 and 2022. That's kind of drifting up. But we are still seeing strong demand and homes sell pretty quickly. There isn't as much stock on the market as we saw throughout the pandemic, and that's kind of leading to a bit of a frenzy among buyers.
Start of this year and towards the end of last year, there were predictions property prices could fall 20, 30% in 2023 with the way interest rates were going. But that hasn't happened. What's the sort of explanation for the dramatic turnaround for property?
Yeah, a lot of those forecasts were following borrowing capacity, and we're seeing borrowing capacity down now around a third. So people just can't borrow as much, and that tends to have a big impact on home prices. We haven't seen that flow through into prices. We've seen prices are now only down kind of 2.5% from their peak, despite interest rates being up 400 basis points.
Right now, there seems to be a lot of politicians are talking about a shortage of housing. Do you see that as one of the biggest challenges facing the property sector?
I think that's absolutely right. I think we've got really strong demand going into what has been constrained supply. We haven't built as many homes throughout the pandemic. Despite all that stimulus measures like Home Builder, we built nationally about 120,000 less homes than we would have if we'd built at the same rates we were achieving before the pandemic. And there's a lot of reasons for that, but fundamentally it means that there's fewer homes for kind of 250,000 people than there would have been.
And who needs to step? Does the government need to do more, provide more incentives to build property? Is that one of the solutions, or is this meant to be led by the business sector?
I think we need a coordinated solution. I think we need to understand what are the constraints for businesses, and a lot of it's uncertainty and cost overruns and really getting projects started. And it's about facilitating building. So where can builders build? Do they not have to go through years and years of fights to get approval to put high density property in our most desirous cities? I think it's both business and government need to come together to think about how we can build more homes now.
And we've also got massive levels of migration as well. So I guess that's just adding more and more pressure on the housing market too.
It is a factor. We were seeing similar levels of migration before the pandemic, and we weren't seeing rents increase anywhere near as quickly as they are now. So it's I think, a combination of that slower building capacity that we've seen, as well as households reorganising since the pandemic, and they want bigger houses, and that means we need more homes for the same number of people.
This week, the RBA lifted rates. A lot of economists were taken by surprise. What are you expecting for the cash rate over the next few months?
I think a lot of forecasters have moved to expecting the cash rate will increase further over the coming months. I think the timing is uncertain, but I think people are agreed that really interest rates need to be higher. Inflation is just more persistent than people were expecting.
And we've seen a 4% increase in rates so far since the record lows last year. How much does that reduce borrowing capacity for people like first home buyers?
An enormous amount. I mean, as you say, first-home buyers have been most hit. We've seen borrowing capacities fall by more than a third. So the same borrower with the same income can borrow a third less than they could a year or so ago. That has a big impact on people who borrow the most, and that tends to be first-home buyers. We've seen the market shift quite significantly towards upgrade buyers. So a lot of people that made a lot of equity throughout the pandemic are still able to enter the market, and we're seeing lots of market activity off the back of that. But at some point, first-home buyers who are stuck in the rental market where rents are increasing 10%, that's a really tough situation.
Paul Ryan from REA Group, thanks so much for your time.
Thanks very much.